Chief Asia economist at Morgan Stanley, joining in. Chetan, pleasure interacting with you. And yes, while I think there has been that slowdown that we've seen over the past few months, I think all eyes are now on what the festive season could potentially bring. And do you think we could see some sort of a shift or a pickup?
Yeah, that's right. So we are expecting that things should improve over the next few weeks. The main reason why we think growth was slowing was the government expenditure slowdown. And then parallelly, we had the excess rainfall in August. And at the same time, there were some shifts in the calendar effects, particularly the festival and inauspicious time period. Um, Going forward, we think that the government expenditure will be the biggest driver for overall economic recovery. So if we take the budget forecast that the finance minister has shared, the implied growth in capital expenditure in September to March 25 should be around 40% year on year. So that should be a big improvement versus contraction that we have seen in April to August. And similarly, revenue expenditures from the government side should also see an improvement. But in all, we think that you should see something in the order of 14% year on year total expenditure increase and 40% increase for capital expenditure, which should turn around the overall growth dynamics in the coming weeks.
Chetan, the Reserve Bank of India is reasonably confident that 7% is the base and anything above that is something what you should expect going forward. So that is the RBI projection. But if I look at the real economy in India, rural versus urban, the earnings season so far, credit offtake, passenger car vehicles, is there a subtle slowdown which has kicked in which will haunt us maybe a quarter from now and Reserve Bank of India may be taken with a lot of negative surprise?
So right now, even our forecast is 7%. So we are expecting that the next 2 quarters numbers will be close to 7% GDP growth. But then after that, we are expecting growth to slow more closer to, somewhere between 6.5 to 7. So call it 6.75 odd range. Now, specifically regarding the September quarter, as I was mentioning earlier, there have been a few reasons why growth has slowed. And so all the numbers that you mentioned are pretty much evidently showing that growth is slowing. But we think that it's a blip or a temporary slowdown, not a sustained slowdown. So we should think that numbers should come back closer to 7%.
There you can see the pre-open indicative price for Hyundai Motor as it gets set to list on the bourses. And you can see the live visuals on your screens coming in from the National Stock Exchange right now. The bell ringing ceremony, 1934, which indicates just a mild discount to its issue price, much along expected lines. We were expecting a little bit of a lukewarm start, at least for Hyundai. But Chetan, the other, big factor now is the emergence of the dragon once again, right? I don't know whether it's going to be as impactful or meaningful, but right now, of course, there is a lot of chatter, a lot of comparisons being drawn around how the PBOC is much like Mario Draghi, doing whatever it takes on a footing. How do you see the impact of China trying to resurrect on the globe and in particular on India?
So we think that China will be, aiming to, stem this slowdown that they were going through. They are still targeting for close to 5% real GDP growth. And we do expect a modest improvement on a sequential basis in China's real GDP growth. But we're not expecting a significant acceleration in China to really start thinking about its implication on rest of the world or India. I think the biggest issue for China that we have been focused on is the problem of deflation. And the policy actions that we have seen so far are supportive and are good, but we still think that it is not sufficient to address the deflation problem. And therefore, we are watching for additional actions that they may announce to fix that deflation problem.
Chetan, so the script of how, we are just, going back and forth between India, China, global, local. So I'm just going to come back to India, focus India back again, right? Because China, nothing is happening. So my question, Chetan, first part is, large part of the heavy lifting in last 3 years has been done by government on back of capital expenditure. But the numbers this year are showing that there is a slowdown in government spending. Do you expect that to pick up in the second half? Do you think that will be at par with what the last year number was?
So I'm just expecting that the government will be able to achieve the budget target expenditure. And if that happens, as I was mentioning earlier, numbers should show a significant acceleration in government spending, particularly capital expenditure should grow at 40% between September to March 25. And what we have observed is during the general election time period, there has also been a slowdown in the state level expenditure. So, as you take the combined central plus state government total expenditure in India, it's about 29%. So we are bound to see an implication of that bigger line item of GDP slowing, and therefore, I mean, I think that that's explaining a large part of the slowdown that you're seeing in the economy. But as I mentioned about the central government expenditure, that is going to accelerate. More importantly, the state government expenditure should also accelerate because there is no reason why their expenditure should continue to remain weak. We can clearly identify, but that it was also slowing because of general elections, and now that it's behind us, we should see improvement in both center as well as state expenditure.
Moving parts. One is the private sector capex. I think the RBI bulletin last evening mentioned that private sector capex is picking up. And second is that after a gap of almost 3 years, we've had a decent monsoon and there are green shoots, not yellow weeds, luckily this time on rural India. Are we in for positive surprise both on the rural demand front and on the private sector capex?
That's what we are building in. We are building in a further recovery in the economy. What we are saying is that we had seen urban economy pick up in as far as consumption is concerned, but that was broadening out to rural India, and we have no evidence to prove that now. At the same time, what we were saying is that on the capex side, there will be broadening of recovery from public to private, and we see that happening as well. And just to highlight on capex, if you look at engineering and construction companies' order book growth, that has been pretty solid until June 2024 quarter, and we're expecting that will follow through in terms of the actual spending in the coming quarters.
In terms of positioning of this entire productivity factor, which every economist is now talking about, AI is here, it will lead to massive productivity gains. Like we saw in the internet era and with the invent of steam engine and the invent of railroads. Are we in for that kind of a setup because of AI? Because a lot of literature and talk and opinions are now floating around that AI will add 1% to world's GDP, 1.5% to India's GDP soon. Is that realm of possibility?
So we think, India is still a bit behind the US, and even in the US, we still don't have very clear evidence of productivity improvement. And it is the nature of this cycle, i.e. the tech capex cycle. If we go back to the 90s, it took a few years before tech capex led to improvement in productivity. And we think something similar will happen in this cycle as well. So I think it is still too early to start talking about improvement in productivity in India because we have not even done that kind of AI capex as the US is actually already doing right now.
Chetan, so let's wrap it up with your thought on where the economy is headed in terms of surprise and in terms of disappointment. You mentioned that you expect private sector capex to pick up. You expect that things on the rural demand will also pick up. But where could the negative surprise come from? Where do you think that it is still a 50-50 kind of a picture in terms of forward assumptions?
So right now, it looks like the urban economy or the urban consumption, which had led the initial recovery, is the one which is slowing. We are looking at the auto sales data just like yourselves. on a daily basis from the government sources. And it is indicating that there has been an improvement in the last few days in terms of auto sales. But urban consumption is the one which has raised some concern because there has been a broad-based slowdown. We've been hearing that even from the fast-moving consumer good companies, but also the auto sales is indicating that there is some slowdown in the urban economy.
Always a pleasure. Certainly hope to see much more of you going forward, and season's greetings and happy Diwali on behalf of everyone from ET Now.
Happy Diwali to you all as well.
Mayank Shah joins us.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.